Hello guys, this is ICT with the Pro Traders Club installment for February 28th, last trading day of February. Okay, so how did you like that trade last night? It was awesome, wasn't it? Okay, I got two trade recaps for you real quick. First, we're going to go into Sunday open. Okay, this is Friday's action in here on the cable. Alright, so we have a new day starting here. Okay, and now what we're going to do is we are going to move forward just a little bit. Okay, now price started to break down in here. Okay, now we went relatively close to the central pivot for Sunday. Now since we started to break down, I wanted to look and see if there was any opportunity to try to trade a retracement of this mess in here, because the overall bias is still up, even though we did see some pretty good swings to the downside last week. So I'm running a fib from low to high, okay, and using Friday's S1 and mid pivots and mid pivot down here, MS1 area for a potential trade setup. Okay. Alright. Here we have Friday's S1 and price traded down, didn't quite get there, bounced, tried to trade back up to the central pivot for Sunday. Old high in here as resistance. If you look back here, okay, price had some interest in this level here, okay, which is understandable considering it's the figure 161. Okay, price trades now down after trading one more bounce in here. Stops would have been placed right underneath this low here for anybody trying to go long. If you look right here, there's a 50% retracement level overlapping with a Friday S1, and we are also in Sunday's MS1, which comes in right in here, which is also overlapping with what institutional level? Between 160.85 and 160.75. What do you get? Institutional level 160.80. Okay, so this was a buy I took. I was reaching for this objective in here initially. Because if you look back here, here's some lows, and here's a low in here, and also looking for a potential run to 160.120, another institutional level. So moving forward, price traded down, blew out the stops in here. Started to run up. Okay, bull flag formation up to Sunday's pivot. Okay. Now first profit right there at 161, 30 pips in the bank. Next objective is here. Stop moved from 30 pips under entry at 160.80. From it was at 160.50, moved it to 160.80 even. Break even. Now there's 30 pips in the trade. Banked, cannot lose it. Price trades back down to central pivot for Sunday. Finds support. Bounces up to our reaction high for another 30% taken out. Okay, now here is where we go back to. I'm going to take this fib off. And what I'm going to do is I'm going to pull it down to here. And then I'll swing this one up here. Okay, so what I'm doing is I'm measuring the extensions from this high here and this low here. So if we trade above this high and my scalp turns into a swing trade, we want to be looking for price objectives. Okay, so we have your extension here, here, and here. Ultimately, we do have an overlapping of 162 extension, which lays right on top of the 161.50 institutional level, and it's falling short of Friday's central pivot. Okay, so that would be the exit should price trade up to that point, trades back down to central pivot, rockets up, and fill right there at 161.50. Bingo. Not bad for guessing, huh, guys? Okay, and then price starts to break down and slides into the London Open. Okay, so now what do we have here, guys? We have a price leg moving up, consolidation, makes a low we traded from, shoots up again. So we have two clear price swings that we can use to measure. So what we'll do is we'll take a fib, pull it from the low to the high, okay, and 62% retracement level overlays with the 161 figure, which is also the 161.02 central pivot, okay, and sweet spot for optimal trade entry comes in at roughly 160.195 area. Okay, so price slammed down into this level right here on this candle right here, and I'll move it over in a second, but for right now, how many of you would have the guts to trade long into something like that? If you're brand new to trading, chances are you probably aren't going to have the nerve to do that. But this is exactly how I teach. This is what you want to be doing. You want to be trading directly right into the most bearish opportunities in the market. In other words, the best buying signals always come when it looks the most bearish, and conversely, the most profitable sell signals are when the market looks the most bearish. Okay, you want to be selling right into bullish candles to exit, or selling into bullish candles, okay, to get short. You want to be buying in the bold face bearish candle, okay, or covering your shorts as you have a bold face candle. Okay, so in other words, you want to be getting out when price is looking the most extreme. So we're looking for a buy signal. Remember, our analysis was stating that on the daily charts, price was trying to pull higher, and there are a lot of stops resting above the market, and market makers are going to try to push up there and try to blow those out. Now, whether we have buying power and continuation of beyond that, that remains to be seen. But we're trading the setups and the conditions in the market right now, and this is how we do it. So we have a optimal trade entry in here. The limit order goes in at 161 even as a limit. Okay. What do you have there, guys? All aboard. That's a railroad track. Big, huge candle going down, and then immediately rejection. Big green candle going up. That in candlestick formations is referred to railroad tracks. Okay, one of the most bullish patterns you can get. Also, note that we are in London Open. Okay, and this candle right in here comes in at 3 a.m. Okay, 3 a.m. on this candle. Again, one more time, the tools making it like a no-brainer for you guys. Okay, price trades up, makes a bull flag formation. Okay, and then shoots up, first objective, taking profits at 161.30. There's a little bit more than 30 pips there, guys. I got a lot more lift in this than I expected. Okay, price continues to reach for first swing objective, which would be 100% of this swing here. Okay, this level here we traded to. Okay, so another 30% comes out. So 40% remains in the trade. Stops at break even. Can't lose anything on the remaining portion. Okay. Market goes to orbit. Alright, now pivot traders. They're going to come into the market and say, okay, we topped out. Let's go short. Okay, we traded up to really nice whole numbers. Okay, but what do we have on the daily chart? We have the likelihood of range expansion on the upside. So whenever we have these conditions, what are we going to hold for? London close. Okay, so price trades up. 162 figure. Okay. 20% comes out, leaving 20% in the market at 162 figure. Price makes one more run up to R2. Okay, and we have a fib extension up in here, which would be overlapping with 162.50. Limit order for remaining 20% on the trade. And we hung around on R2 for a little while, just enough to suck people in trying to go short, thinking they caught the high of the day. But is it time to do it yet, guys? Absolutely not. We are looking for London close. Okay, price finds support at R2. One more pump to the high side, and 162.50 is blown out. So we do have a profitable exit at the London close. Provided us a exit for time and price theory. And we missed the high by about let's see, about 25 pips. So that's not bad. 26 pips from the high. Okay, so that's that was the London Express. If you didn't get in on it here, stay off the tracks because it's going after rails, and it moved up handsomely. Now, why did it go up to these levels today? Well, let's pull a 15-minute chart up real quick. Okay. See these highs here, guys? On the 23rd. Remember I told you it's too clean up there? Even though it gave us nice sell signals, I told you before all this happened today that there was going to be resting stops sitting right above this high. Now, let's condense this a little bit. Here's those highs. Let's put a line right on the high of this candle. And you can see, bingo, traded right above it. Now, it doesn't have to trade much, but it's just enough to set off the buy programs for anybody that has stopped sitting up there, and then it'll retrace and pull back into the daily range. Now, is this a day I would go and trade the London close short? Absolutely not. I just don't want to trade against that type of price action. And when you bank that many pips on the long side, why go in for another run for something when you've already made such a killing? So once again, the tools spoke very clearly, and I've already cheated and peeked at the thread. I've seen some individuals with some wins, and they traded very similar to what has been discussed here. So if you took the trade, kudos. And if you didn't, hopefully you've had a learning experience. And you can see that these things aren't hindsight, guys. These are actual trades that are panning out using these tools that anyone can do. And it's been placed in the thread in advance. So no hindsight. Have a good one, and I wish you good luck and good trading.